many local investors, getting approved for a mortgage can feel like jumping through endless hoops. But what if there was a simpler way to qualify? One that focuses less on your personal income and more on the property itself. That's the topic of discussion in today's edition of Living Akamai.
Any investors out there having a difficult time getting a mortgage? There may be some relief. Nelson Oyatamari with Primary Residential Mortgage is here with great information on financing options available to the real estate investor. Welcome, Nelson.
Thank you.
When many try to get a mortgage for investment properties, the paperwork can be overwhelming and qualifying at a bank can be difficult at best. So is this experience the same or has it gotten a little easier?
Well, Kate, getting a mortgage, follows two paths. It's a traditional path and a non-traditional path. So let's say you wanted to buy an investment property today. The traditional way, we'd look at your 2 years of tax returns, we'd look at your current pay stubs, we look at your current housing expense and all of your monthly obligations, and we weigh those and analyze it. This is the traditional method, and oftentimes the income is not enough or the monthly debts are too high to qualify. So in the past few years, there were a lot of private investors that recognized that there may be a different way to qualify. Enter the non-traditional mortgage option. So one of them is our rental income program, which does not look at your employment, your wage income, or any of your normal monthly debt. It only looks at the property you are buying. Can the rental income from the property you're buying generate enough income to cover the total expense? Your mortgage, your property tax, your insurance, your maintenance fee, if any, no tax returns, and no pay stubs. Again, all we look at is the potential monthly income from the property you want to buy.
Wow, that's great news. A lot simpler. So what if the rental income is less than your total monthly payment?
Kay, we often see this because of high maintenance fees, for example. We still can provide a mortgage, but these loans present a little greater risk for us, the investor. So we may require more cash reserves. Reserves is money that you have after making the down payment and closing costs. And of course, the interest rate might be slightly higher.
You mentioned maintenance fees. So you're saying that you can actually use this program for condos as well as single-family properties?
Correct. Both are eligible.
And when you say condos, what about condo-tels? Where the unit you're buying is going to be rented or put into a hotel rental pool and is essentially a hotel room.
For a long time, these types of units were not eligible, and we call them lodging units because they normally don't have a full kitchen. Most have a countertop burner or a microwave and an under-counter refrigerator. Today, through non-traditional lending options, we can provide mortgages for these types of properties. And because lodging units are considered high-risk loans to us as an investor, we usually will finance up to only 50% of the purchase price, but still better than having to buy it cash.
That's true. It's also important to know what lending options are out there. And since there's much more you need to know about these programs, I'm really happy that Engel Invokers is hosting you at our next seminar to cover investor mortgage programs along with other non-traditional mortgage options to help acquire real estate when you thought you couldn't do it. So thanks for joining us, Nelson.
Thank you.
If you would like to attend this seminar about alternative mortgage solutions or any of our other upcoming events, give us a call at 808-725-2000 or visit our website at livingakamai.com. Thanks for joining us, and we'll see you next Tuesday. Engel Invokers Honolulu is here to help you live Akamai.
And for a ton of past stories, you can go to KH12.com, hit the Living 808 tab, or just visit them at livingakamai.com.
Yeah, and always, if you guys have the time, check out some of their seminars. There's a lot of great information.
Yeah.
I know there's a lot of questions that people have watching at home, but those seminars are the great opportunity, or is a great opportunity for you to ask Kay and a lot of community organizers.
Absolutely.